Happy Friday, everybody. Thanks for joining me. Hey, what's up, Trading View? Hope everyone's doing good and getting ready for Christmas. I don't know if you got all of your shopping done yet, but that's the thing to do this time of year. Spend those retail dollars and make those stocks go up. So, my goal here is to give you guys the best analysis of the markets going into the end of the year so that you can make the best informed decisions. This is what I'm going to give you guys today is very important because this week on the CPI numbers that just came in on Tuesday, that gave us a big signal in the S&P 500, the market as a whole. And we're going to talk about that here in just a moment. If you're joining this live stream late or you're catching it and recording broadcast, I do this every Friday. And this is where I do my own research vocally so that I know what I'm going to be looking at for opportunities in the week ahead. I am a professional trader. This is how I spend my life and my days studying the markets, and I want to share my passion with everybody else. So thanks again for joining us. By the way, little plug, I have a Discord that I don't actually charge for. Hopefully that's refreshing to some people that are used to finding these Discords that are paid. I just don't believe that anyone that's trying to charge people a bunch of money for a Discord is going to be any better than your own opinion. And hopefully I can help you guys learn to think. Think for yourselves, get past the narratives, because I'm going to be working on my year-end, start of year letter. I did this last year, and I wanted to start a tradition, letter to my subscribers. I need to go back and read it and find out what I got wrong, what I got right, and I already have in my head what I'm going to write about 2022. It's very surprising that the year is over, but then again, it's not really that surprising because the passage of time is one of the most fundamental understood concepts of the universe. Time does go forward. So I don't know why people are surprised, but it does come as quite a shock that we're only about 2 weeks to the end of the year. Wow. I still think we're just barely in post-pandemic time. Hold on a second. Black screen. If you're getting a black screen on TradingView, try to refresh. That seems to happen to a couple of people every once in a while. Do a reset, F5, and see if that fixes you, Ghost and Dave. Try a F5 refresh. That has happened to a few people before. I'm actually making sure that the trading view is working. I see it on my screen, but just let's make sure that you're working too. So I multi-stream this on. I started on TradingView. I mean, that's the main place that I like to stream. I get a lot of good user feedback and commentary on TradingView. I like the guys there. They're very important to my workflow. If you notice at the very beginning, I had an alert. Okay, refresh it. Got it. Works. Great. TradingView is absolutely integral to my workflow. And I day trade futures on it. And that data that I have to pay for, by the way, it's about 5 minutes delayed if you don't, works just fine for day trading futures. In the first part of the live stream, I want to do a market recap. We're going to look at equities. We're going to look at equity futures. And then we're going to take a look at crypto. As we can see in this time of year, red and green is the color of December. And on my watch list, you can see that I have a lot of red and green, mostly red for today. But this is not altogether unexpected based upon what we had happen on this Tuesday news event, and I'm going to talk about it. I made a post about it yesterday, and I'm going to drill down into this post right here because this is really a culmination of my analysis style. What has worked for me, what I think should work forever, it's very simple. I'm not using a bunch of moving averages, not using a bunch of Fibonacci retracements, just one. And just two simple concepts. And I want to share that with you all because I think these are the most important concepts to trading and market analysis beyond anything else. And that's my opinion, but that's because it works for me. And it's taken me about 10 years to kind of come to this coalescing of what I see as useful in markets. And that's why I do this live stream, to share it to you guys. So we're going to talk about that. I know last week we were looking at Bitcoin. Bitcoin was the key level that we were looking at on Bitcoin was this 18,500 level. That was the conversation we had on Friday of last week, and it pushed up to it. It pushed hard, but it could not actually even quite get to that resistance that we had labeled on Bitcoin, that 50% of the whole FTX debacle right here, that big crash that we had at the beginning of November. And yeah, we'll talk about what the implications of that are. And like always, if you all have your own instrument that you want me to look at, pop it in the chat and we will take a look at it. I'll tell you what my analysis of it is. I'm hoping that it will be something that I can give you some useful information on. And that would be something with some good price history. Because if it's something that just started trading a month or two ago, may not be able to help that much, but there's a lot of stuff that you can garner from looking at a chart going back with enough history. You know, how trends develop, how they change, how to pick bottoms, that kind of stuff. So, looks like people are starting to filter in. And yeah, so if you have any questions or if I start going into a concept and you want a little more explanation, I want you to stop me. I want you to post in the chat and we'll dig into it. You know, whenever, still to this day, back in October of last year, October 2021, I went to a DeFi seminar where they were teaching about distributed finance, you know, the staking, you know, all that stuff, earning yield, because I found it was fascinating. I found the idea of peer-to-peer lending in the cryptocurrency space to be very fascinating. I sat at the front of the room and asked the most questions of anyone in there. There was about 50 people in there about October of 2021. And at the end, the gentleman giving the seminar, he comes up to me, and he says to me, so yeah, did you learn a lot? I was like, I learned a ton. So what do you think you're going to start, getting into? What's the currency or whatever that you're going to start staking? And I said, nah, I don't think I'm going to. And he looked very perplexed. This was around the time of Ethereum. Let's go back in time so I can speak to that. So this is about October. This was, let's get the October in here. Clean this up a little bit. All right. So this is November. Yeah. So it was right around the time we had this false breakout on the weekly. Let's let that weekly bar close. Yeah. So when I saw that this Ethereum failed to really solidly break the all-time high and started closing below it, it was mostly in Bitcoin. That was the main thing. Yeah. So Bitcoin essentially was what I was keying off of. Anyway, he gave this whole presentation, and I asked the most questions because I really wanted to learn this stuff. And then when he asked me how much I was putting into it, like money-wise, I told him nothing. And he was very shocked. And I told him very simply, I don't like what the market's doing right now. And that was because we failed to break out here back at the end of 2021. So a year has passed, and now we see the result of what happens when you don't get that sustained past an all-time high or a major high or low. That simple concept is not just useful on crypto. It's not just useful on the weekly chart or monthly chart of crypto or anything else. It's useful on every time frame and every instrument. That's the fundamental thesis that I operate on when I'm analyzing price and charts. And it works very, very well. And so that segues into the analysis of the S&P 500. So we'll start with that first. So let's do a little history lesson on the S&P 500. Now I use the ES1 exclamation point or /ES, depending on your platform. I use the S&P E-mini futures. I find them to be the best way to chart it because these are open 24 hours, well, not 24 hours a day, about 22 hours a day, but most of the days of the week starting Sunday through Friday. A lot better than the SPY, which trades during the cash open, which means that it's going to have gaps. This is what I use. And the big defining trend of the last 2 years, recent history, is, of course, the COVID low to the all-time high. Everyone can see that. It's not that hard to point out. One of the fundamental concepts that I use in trading and in my analysis, finding trades and analyzing what a chart is doing, is I look for the 50% retracement level of major trends. So if we start the major trend from the COVID low to the all-time high, we see that it comes up to about, on the ES, 34.91. If you want to confirm that on SPY itself, as I've done in previous examples, it looks about the same. COVID low to here, that's a SPY of, let's call it 349, or just to be nice and clear, 350. Okay? Going back to the ES. So if you look here back in October, it kissed that level. It came down, and that was almost a perfect hold of that level. I like it when the 50% retracement also matches with some price inflection, these highs that were made back in 2020 from August through October. Refresh the screen if you get a black screen on TradingView. F5 to refresh if you get black screen. That seems to be the fix. Has helped other people. Let me know if you still have problems. Thank you for letting me know, though, if you're not seeing things. I'll let you do that, and then I will continue. Little quick thing about TradingView. If you're wondering how to make this little tool, it's going up here to the fib retracement. Most of the time in the stock that you have, just F5. FN F5 tells me that you're on a laptop, and that's probably going to do something weird, like turn your screen off completely. Let's not do that. Just F5. And what I do is when you first open up your Fibonacci tool on TradingView, it's probably going to have all these extra lines. Now, why don't I use these lines? A lot of people do. I don't use them because I feel like I have a very small brain, okay? I'm just not able to think about this many numbers at once. It's just a limitation I have. And the 50% just works better. And so what I do and have done is just taken all these off and use these as a measurement. And there we go. There's our 50% level. And as you see, it worked just fine to hold it. Now, moving forward, let's mark off this little level right here. Let's mark it off with a arrow. Zoop. Okay, that level right there. So we're going to go from the weekly chart down to the daily. Now, didn't quite kiss it here. Interestingly enough, the SPY did hit its 349 level, okay? But even if we had an alert here and we missed it, there was still something very important that happened on this day. This day right here, which was the October 13th CPI print. I know I talk about this every week, but it's just really, really important. So if you guys have been a regular listener, just hold on. You already know what I'm going to say here. So this was where we had an 8.2% CPI number instead of an expected 8.3%. That indicated slightly that inflation may have peaked. And that ended up being a major inversion point in the market. The key thing here is this. This day in particular, let's dig down a little bit. Let's see what happened. You had this big sell-off that came in on the news right at 8:30 on October the 13th. That was the news. Huge sell-off. And then it bottomed out once it hit or got close to that level. And it rocketed up right off of that level. Basically, right at the cash open, 9:30, people started buying. It was a total fake out. Total fake out. And these are super, super important. Back up. You remember when we were looking at Bitcoin, where we looked on the weekly here, where price basically poked its head up, and could not sustain that movement. Faked everybody up to the upside, thinking we were going to the moon. We were not. That is why these fake outs are so important. If you can recognize these fake outs, you can not only avoid them, Avoid getting caught by them, but you can turn these into trading signals because that's what I use. That's what I look for day in, day out, whether it's a daily, a weekly, a 1 minute, a 30 minute. These things happen. They happen a lot. I have a little indicator that I made in TradingView that shows me where they are. It's not that magical. And if you ping me on Discord, I'll add you to it for free because it's that useful. But what it measures is when price breaks a prior low or high and then comes back up to close within this 9-period median. It's the Tinkinson from the Ichimoku set. That's what it is. Ichimoku is what taught me about 50% retracements because it's all based on 50% retracements. But I like clean charts, and so I only turn it on sparingly. And so once that happens, there's your bullish signal. There is your bullish spike because everyone thought we were going down. Everyone thought that we were going down to, I don't know, SPY 200, SPY double digits, depending on how much FUD that you ask. But instead, from that October CPI print, what did we do? We rallied. And that's exactly what you should automatically expect when you see a fake out to the upside or the downside. Now, what did we do this week? You notice that this right here has a highlight of its own. Well, that's because on the December CPI print, that news, remember this was the October, if I can draw, that's the October CPI, and now this is the December CPI right here. So from October to December, that is the trend, the bull trend that we had. And we had that same spike, that same push above the past high and a full close below. That's bearish. That is a bearish sign. And so the following day on Thursday and then a follow through today on Friday, Friday was actually a good confirmation of it because we broke, well, I can just use a flat line for that. We broke this level of support and resistance here and closed below it. So I assume that I'm looking for bearish opportunities. I want to be short. And there's one more additional thing that I talked about in my idea, this idea that I posted a few days ago. If you want to, it's really quick read, where I'm basically going through what I talked about here because this is a very, very important concept. It's a lot better than listening to Kramer and taking the opposite of what he says. Actually, that's a pretty good metric that people have found is to inverse Kramer. But I think Kramer was making fun of people for selling yesterday. Yeah, we'll see. I always am very upset when I see that he said something with the perspective that I have because it's become so popular and useful to inverse him. But there's one more key thing about this level. If we draw our 50% retracement for the whole down move from the all-time high at the very beginning of this year down to that October CPI, right here is our level. Our 50% level is 41.57. And that is, again, the level that this bearish spike kissed. This tells us a lot. It first of all tells us that we hit resistance and held it. We held it and even gave a bearish signal. And the math on this works out where if you were to just take this as a trade, if you were to take, let's say, a put, and you knew you were wrong, in other words, the market gets bullish if we break Tuesday's high. That's the sentiment right now. If the S&P 500 breaks the Tuesday, December the 13th high, then we're going up. That means that if you're in a bearish position, you're wrong, you get out. So you know where your risk is. Your risk is, from Wednesday, now it's already moved down to about 1-to-1 on this trade. But what I'm going to look for in these spikes is about a 2-to-1 to a 3-to-1 risk-reward ratio. So a 2-to-1 brings us back down to these lows from the beginning of November. And 3-1 gets us back on a retest of the low. That's probably going to be what happens going into the rest of the year. So, sorry to tease with the cute little miniature Datsun, however you want to pronounce it. But I don't think we're going to get a Santa Claus rally this year. I think we're actually probably going to get a bit of a sell-off. Now, the cadence of the market all through this year is, of course, what the market does, which is go up and down, very sinusoidal. And so I would look next week for some kind of an up move. And at that point, I'm going to be looking for some bearish opportunities, either in stocks, in some puts, one way or another. But I know that if we can break the high that we made Tuesday, which is about 4205 ES, or I bet it's about 420 SPY, that's the key level. So 420 SPY is the key level to break. And if that happens, whether it happens before the end of the year, low probability, or if it happens into the first quarter of 2023, then you're bullish. And then, frankly, we can probably come on up to retest the all-time high. And we can keep on doing this whole bullish stock market always go up for the last 40 years. Doesn't mean in this down move that we necessarily have to go down to FUD territory, recession territory. It's not what it means at all. It means we're probably going to get a retest. And what I mean by retest is that price is going to try to explore the area back near this low. It may actually set up a double bottom. That would be the optimistic case. But that would be what I'd be looking for. So in the next few weeks, I think that we're on the bear side. Now, I'm also justifying this by looking at VIX. And for those that don't know, the VIX has an inverse correlation to the stock market. Let's bring it up here. I talked about this last week, so I know I'm repeating myself, but for anyone that's new, I think these are very, very important concepts. So back in March, right? So back in March of 22, when the VIX got to the key level of 20, now notice how, let's kind of walk through this a little bit, okay? So VIX goes up when the market goes down. What VIX measures is the implied volatility of SPY options. And typically, implied volatility rises. It's also known as the fear index because people are buying protection against movement. They're buying insurance, and so the prices of options lift up like a tide. And so what the VIX measures is the tide of options pricing. And so as the market goes down, typically options get higher price because volatility is expanding. And so people are paying more for that protection. And so whenever you go up in the price, you go down in the VIX. And likewise, VIX goes up, price goes down. You have a little bit of a inversion right here, which is also where the market came up right here. So you can start to see this inverse correlation here that's very, very consistent. And even though the VIX, which is on the top here, and we got SPY down below, even though the VIX is a derivative of SPY, it's the tail of the dog, if you will, it actually in itself seems to trigger a lot of these inversions. You can time the market based on the VIX in a lot of cases. When the VIX hits a major support or a resistance, that can also be a good inflection point in the market. It's really good for putting on swing trades. Just like when we came back down to this 20 level back in August, that was also the local high of August right there. So it held a support right when the SPY rolled over. And then as volatility increased, the market went down, topped out at the same time that we bottomed in October. You can even see a double top here, a double bottom there. And then now what we've done is on about the 1st of December, we hit VIX 20, and then that is where we have solidified. So you can very easily see that VIX is beginning to rise as the market begins to go down. They are definitely in sync. And this, let's just kind of clean this up a little bit. So if you did not see, I mean, on this chart, you're not using moving averages, you're not using any retracements, if you had nothing else, and you just said, you know what, I can see that VIX 20 throughout 2022, here is where we broke it first in January. We hit it in February. There's the first hit. That was a high. March, we hit it. Okay, that was where it topped out there. August, we hit the 20. That's where it topped out there. And then now it makes for a very good guess that that is a market inflection point. So we have multiple instances of price on the S&P 500 telling us that we've had a little top out this week, and broadly the volatility pricing, the VIX, is telling us the same thing. Any questions about that? Let's look at some comments. Yes, we're going to talk about Bitcoin right next, King. Let me go back and take a look here. Thank you for your educational points. Been learning the market for the past 2 years, and I still think I'm new to the market. Yeah, well, I appreciate you being here. Thank you. I hope I can help. For some reason, it doesn't work for me. I'm new here, but my PC is good. So okay. Oh, you got it working. Yeah, sometimes you have a good time. You have €100 in your balance. You trade indexes on Capital Common Forex. What do you think I should aim pips for in my trades, and how many trades is good for a day? And what % profit is amiable for a day? I'm only 16, so I'm not good yet. I'm just trying to skip the whole 9-to-5 life. All right, there's a lot there. Let's work in reverse. If you're 16, I really commend you on making this into your field of study. This is cool. I wish I had started when I was a teenager. I wasn't that interested in finance as a teenager. It's interesting. I talked to a lot of teenagers that I met through Discord that they have started trading well before 20, and they are trying to make sense of the market. Right now, you need to be focused on learning. Just focus on learning. I know you're not going to listen to me. I know that you want to have $1 million by the time you're 21. It's probably not going to happen for you, but it doesn't mean it can't happen by the time you're 25 or 30. And I know the idea that it's going to take you 10 years to earn the proficiency and the money, but that's the way life actually is. The reason people work 9-to-5 jobs is because life takes time. 8 hours a day, 7 days a week with just a few vacation days are how things get done. Trading is not going to be a very simple process for anyone. It's not been a simple process for me. And if anyone tells you it's a simple process, they are lying to you, and they're probably going to charge you for a class. That's how they make their money. So in whatever way you can listen to me, be patient. Learn everything that you can. Follow the market. Just take trades. Don't worry about the money. Don't lose your €100. That's a good start. Don't worry. You're probably going to lose it at some point. Just go ahead and assume that €100 is gone. Trust me. Don't add to it until you've proven yourself that you can actually grow it consistently. And by consistently, I don't mean that you have a good month. Give it a year. Let's see where that €100 is in a year. I know a year is something about the tune of about 8% of your life right now, which is a lot. But that percentage actually starts to shrink as you get older, and it doesn't seem like that long. It goes by pretty quick, trust me. Focus on learning. Don't focus on all the nitpicks about how much you should make and that kind of thing. You need to learn the market. You need to spend years watching and trading the market, because that's the only way that you're going to pick up on these sort of instances that I'm talking about. This, which I just went through on the VIX and the SPY correlation, this was taught to me almost 10 years ago by my mentor, and I've studied it for almost a decade to be able to see it. It seems pretty simple, but I needed someone to point it out to me years ago, and then I needed to study it further. So this is the process of learning. This is why I do this, is to teach what I know, what I think is useful. So try to absorb it. As far as trading Forex, I don't think it should be any different. I think that you can use what I've been talking about with 50% retracements and spikes. So now that I've put that into your head, I want you to start looking for these things. I want you to practice drawing them on your chart, seeing what happens when price comes to that level, and then taking a trade. See what happens. Then focus on risk management. And if you want to, down below is my Discord. Hop on and ask questions, because other young people may have the same questions as you do. And I like to answer it in that format so that some of the people that may be a little more shy, I commend you for asking questions. You're going to actually go very, very far asking a lot of questions. So come down and let's have a little more conversations about it, more specifics. So Hien is a straight A student, and he blew up his account this year. Yeah, I don't think grades really in school really translate very much to trading. Trading, to me, the most successful traders that I have known are the ones that had not necessarily book smarts, but emotional intelligence. And by that, I mean emotional intelligence of their own intelligence. They were able to control their emotions. And the weird thing is you need intuition to do it as well. Yeah, Golden Road just shared this. I saw this week. This is actually very apropos. This right here. The patriarch of the family office, by the way, family office is not a hedge fund because they're not regulated as such, but they're basically a small group of traders and investors. You're a family office so that you don't have to apply to be a hedge fund and be regulated that way, but you're basically traders. You're traders and professional traders and investors. Is a 1970s CBOE, that's Chicago Board of Exchange floor vet. I almost wish that I would have been born earlier to have been a floor trader. I'm 6'2" and I can yell really loud and it doesn't hurt my voice. I think that would have been a lot of fun, but I was born in this era. But yeah, if we can see here, in most professions, the learning curve can be a little flat, or you get a little acceleration as you spend more time. But trading is this incredible amount of optimism that you get after you find something that works for a little while. And then you go backwards because what worked for a little while stops working and you're still using the same amount of risk. And then you're in this plateau of stagnation as you try to figure out what to do. And then finally get to the bulldozer of margin calls. So I thought this was very funny. I think this came out, this week. So thanks for sharing that, reminded me. Yeah. All right. So let's look at Bitcoin, and because that's what the people want. And then we're going to look at some things in the chat. I have a couple of things to look at. So if you have a question, just post it either in just chatting over here. Do we have anything in? Okay, good. Yeah, we're just in just chatting. That's fine. And or if you have things on TradingView, punch it in. All right. Let's take a look. Bitcoin. Last week. Let's back up to last week. So last week, I talked about Bitcoin and my analysis of it. This was Tuesday, Monday, Sunday, Saturday. Okay. We didn't have the benefit of all this ahead of us. I'm pulling out the Ichimoku here because Ichimoku is really operative in the cloud, the daily cloud of Bitcoin using classic Ichimoku settings, not the new updated crypto ones, which fortunately I don't see that much anymore. A lot of people have gone quiet in the analysis space, but these are the classic numbers set out by Gosha Hasada back in the 1930s. And this is the ones that I still use, 9, 26, 52. And I did a whole deep dive into why these numbers and looking for price to be above the cloud at the same time that Chikou is above the cloud works even better than hodling. And that's what we were looking for. What we were looking for last week was price to get out of the cloud like it sort of did here back in November. But a key difference is we need that purple line, which is Chicago or the lagging span. If you're looking at it in TradingView, we need that line to get out of the cloud as well. And what that line basically is the closing price going back 26 bars. Very simple, nothing magical fancy about it. Let me highlight that a little bit so that we can see. Boom, let's make that a little bit thicker and go. Maybe make that a little slower. Okay, so even slower. And take that away. Okay, first thing that is going to happen if Bitcoin is going to get bullish once again is it is going to have a closing bar on the daily outside of the daily Ichimoku cloud. Very prominent in the Ichimoku set. And we got that in November. I made a post about it because I wanted people to be aware of it. But you need that momentum to get out. And so as it goes along, you see how momentum tracks with the closing price. We need this guy. We need this to get out. We need momentum to get out of the cloud as well. That is our confirmation. That is our trigger to actually say that we're bullish. If we don't get that, then we're being too hasty. We're being impatient. This makes people be patient. And as you see, that kept you from jumping in back at the beginning of November, where you'd be holding $21,000 sats. Well, now you have a chance to stack cheaper sats. And it's going to be that way for a little bit longer, because what ended up happening was we started to get a little. Let's slow this down. I want people to see how this moves so they really truly understand how momentum in the Ichimoku set works. So let's just make this slow and then go through here. So there we go. So you see how it's going to track price 26 bars back. Another little trick you can use with momentum is when momentum runs into price, then you know that the bearish trend is getting weak. So let's watch what happens when the momentum touches price here. Starts to get into it. And at this point, now you can say that bearish trend has gotten weak. And when momentum gets on the other side of price, that's when you can actually start to maybe look for a bullish short-term trade. And that's exactly what we got. So it's also useful in the lower time, in the smaller, shorter time frame as well. But let's just focus on the cloud and the uses there. So we did get a spike, but we're not going to focus on that. Last week on Friday, we were still sitting in this little tight consolidation right here, and we were looking at the 50% of this FTX down move to be a potential resistance. And of course, that is at 18,500. So that was going to be the key resistance to look at. And then on Tuesday, when we had all this news coming out about CPI, every single instrument that dealt with risk, from equities to gold to crypto, all moved. But Bitcoin failed to get quite to that level. I knew that was going to be a resistance level, but it didn't even quite hit it. So what's it actually doing? Well, we can take off Ichimoku here to see that what it basically did was Bitcoin price came up and it held these clear supports of the prior channel. That's not bullish. That is bearish. So what the price of Bitcoin has done in this little rally from the FTX debacle is it has come back up to the June lows, the October lows. It has taken these lows and made them into a resistance, and you have a solid hold of that resistance. Bitcoin, just like equity markets we were looking at earlier, over the next few weeks is probably going to go down. Now, I don't know, just like with the equity markets, if we're going to break this low or not, but it is very likely going to do a retest of the lows. So we are probably going to come back down to 16,000 Bitcoin. And we'll test it and we'll see what happens. But this little rally we were right here got stopped out. And it got stopped out by the CPI news. So crypto is still being dominated by inflation-related news. It's still being dominated by interest rates, just like it has been for the last year, all the way back to this very, very interesting little bar right here, this December 3rd, 2021 bar, which was the U.S. jobs report. Why does Bitcoin care about U.S. jobs? Well, that's because the party of cheap credit, borrowed money, buying Bitcoin was coming to an end. And that was the sign back there. And this continues. Just going to be honest. I've been trading, watching, charting Bitcoin since this move up back before here, back 2011. Bought my first Bitcoin at $20. I've seen all these cycles. And I'll tell you this right now. If anyone tells you that Bitcoin is going to recover these highs within the next year, that's just massive cope. Massive cope. These bear cycles last a very, very long time. They last until no one cares. They last until everyone thinks that Bitcoin is the worst investment possible, that crypto is dead. When you hear those kind of news articles, or rather you don't hear any news or post about crypto at all, then you know it's probably a bottom. I'm going to keep talking about it because that's what I'm looking for. I'm looking for everyone else to stop talking about Bitcoin. But more important to Bitcoin, since we're talking about crypto, I got to say it. If we look on my little list over here, my little watch list, you'll see that out of the crypto that I've been watching, there's one particular green. So it's a small green, but it's a consistent green. This is XMR BTC. This is Monero relative to Bitcoin. And for all of 2022, Monero, which is a privacy coin, has outperformed Bitcoin. If you had money in Bitcoin and you had a time machine, well, you probably would have done a lot of things different. But if you had gone back to the beginning of the year and you had diversified into a privacy coin rather than Monero, you would be down half as much. Half as much. It has retained itself as a store of value. And in this week's little price volatility, it had a dip just like everything else. But I think it is worth looking at the recent price action. Here was the FTX move down. And if you had bought right before the FTX move, you're basically back to about break even. If you had bought Bitcoin right before the FTX move, you are still down about 15%. And the same goes with Ethereum. Now, there may be other currencies out there that perhaps, Solana, no, definitely not. 61% since the FTX thing. Well, that was because they were very heavily into Solana. I'm just going to stop looking at that. Sorry, Solana. I've been watching that for a friend. Hopefully they're not still in it. That actually gets removed from my watch list. That's DOA. Monero is the one cryptocurrency that is holding its value that I know of. Look, there's probably some currency out there. What about Litecoin? Let me look at Litecoin real quick. Let me not say it's the only one. It's the only one that was on my priority. Well, there, I stand corrected. Litecoin, for some reason, is doing pretty well. So there you go. But in this bear market, it may be that Bitcoin is not the best place to be. I know that's heresy for the Bitcoin maximalists, but that's their opinion. What I'm seeing here on the charts, and what I'm also seeing in terms of a use case, as more regulation starts to be talked about, as more regulation comes down the pipe, it's going to be very much harder for new cryptocurrencies to actually start coming out. I mean, we're not going to see the kind of markets that we did before, especially if some of these people face jail time. I think that there was a hey, can you post me that that indictment, Jen? Can you find that for me of the people that those social media influencers? So you're going to start seeing over the next year or two in this bear market cycle. That's another thing. A lot of these indictments, a lot of these prosecutions are going to start coming to the forefront, and the news you're going to hear about crypto for the next few years is people, prosecuting the crap out of the bad actors that were in the crypto space over the last few years. Celebrities getting sued. These are the news events, and so you're going to have a lot of negative news as all of these cases get fought through court. That's not going to instill people's confidence in crypto. And so you're going to have this sort of feedback loop of negativity along with the price that's going to slowly grind people out of this market. If you own crypto, if you still believe in it, then you just need to sit back and gather cash. And if you want to dollar cost average, and you can, but don't let anyone tell you or give you the expectation that this is going to be over quickly. It's going to take time. It's probably going to take lower prices, because the bottom is when everyone has agreed it's horrible, and the top is when everyone agrees that it's just the new thing that the Fed is going to put on their balance sheet and the whole world is going to adopt as currency. Or you can do, as I said earlier, where you watch on the chart. If you see Bitcoin, the next time it does a run for the all-time high, if it fails to break that all-time high, don't listen to people telling you to hodl. Be smart. Protect yourself. And I promise you this. I'm going to talk about it, but you can find it for yourself, even if I get disappeared. By the way, I love my life. I'm in great health. I do not have any intention of abstaining myself. But if that for some reason you don't have me, if you want to know when the next bull run is going to happen, watch for price on the Ichimoku cloud to get out at the same time as momentum, which is what it did in July of 2020. Let's just go back in time. So there was our COVID low. Actually, let's go back to COVID. Let me go back a little bit further. The last bear cycle was this. This was the 2017, 2018 crypto cycle, which many of you newbies probably didn't see, but I did. And from the top in December of 2017 all the way to October of 2018, a whole year, it ground people down. And eventually people started saying, oh, well, clearly this is the bottom. Clearly this is the bottom. Bitcoin's not going to go any further than, 6,000. That's clearly the bottom. Although they missed this October 2018 spike. I was using some other analysis and having some debates with people about it who were looking at some of the margin trades going on, and they came to the conclusion that Bitcoin was about to explode to the upside. I took a different opinion. And I think the key thing to note here is that even though everyone thought the bottom was in at 6,000, it still came all the way down to about 3,000. So when everyone thought that the end was over, it still had minus 50% to go. That is crypto. And then as it did actually start to bottom, by the way, notice how we got this little bottom out right here. We have this little reaction, which you could have put a trade on right there with a stop below the low. That was your first sign that you would have been able to catch the bottom. Never would have gotten stopped out below that, but that was your confirmation. Get price above the cloud, momentum above the cloud as well, and start the next bull run, which this is probably what you're going to see. You're probably going to see what happened in 2019 happen once again. And this is going to bring everybody back to FOMO into it. You're going to have all those personalities that sit back with that meme about, I stacked my sats. All you people said Bitcoin was dead, but I'm going to be a billionaire. Well, that was still a bit foolish because you still, given that this is 2019, have something coming up. And I think we know what that is. I think we had this little beer bug that scared everybody out of everything. And even though people started buying it up into the multi-thousands, then 11,000, we still came all the way back down to almost those lows from 2019. You still had another chance. You didn't need a FOMO. But post-COVID, price gets out, momentum gets out at the same time. That's your sign. That's your sign. That's all you need to do to know when Bitcoin was bullish again. Miss that one, wait till it comes out of the cloud again. Did it break below? No. It actually held, and then up it goes again. The cloud functioning as a support. And then you just sit there and you ride it. You ride it, ride it, ride it. You ride this all the way through 2021, still not below the cloud, still not below the daily cloud. You're still holding. Diamond hands, diamond hands, diamond hands until price and momentum get below the cloud at the same time. There it was. You needed to be out of Bitcoin at 46,000. Price, momentum, both bullish and bearish. That got you out of the trend back then, and you're sitting at $46,000 worth of Bitcoin. Maybe you had a second opportunity to maybe grab some more here, maybe for this second run. Again, didn't trigger you out. You bought it here when price and momentum got outside the cloud again, but once again, in December, you're out. Made a little bit of profit, that's okay. Pay a little bit of taxes on that, but keep yourself protected. But you need to be out at around 50,000 this time. And then you wouldn't be sitting here wondering what to do at 16. So wait, be patient until you get both price and momentum out of the cloud, which is still in the 18,500 range. So when this number comes over to 18,500, go look at the Ichimoku chart. So let's read some comments, and then I'm going to look at some news events going into this evening here. So let's see what's happening with BTC. I'm trying to join the Discord server, but link is not looking. Okay, so the link's not working? Huh. Let's see. Hang on. Discord. Continue. Okay, I'm going to check on that. It seems to work for me. If you click on the Discord link down below, send me a message on TradingView. We'll get you set up. Have I ever looked at DAX? On TradingView, the symbol is GRX Euro. GRX EUR. So that's the Germany. Okay. It's probably definitely a different beast. I would very much be interested to look at this if I wasn't so focused on U.S. stocks. I don't think there's an instrument for me to particularly trade this. Is probably why I don't do it. But what I do find interesting just looking at this, without even turning on my indicator, I see that on Tuesday of this week, it also had this fake out to the upside, which triggered a move down. Doesn't quite meet my criteria because this wick is not very high, but I can just see with my eyes that you also on the DAX had this fake out to the upside, which signaled a downside. What is looking pretty clear here to me about this DAX is that you have a very nice, thank you for pointing this out to me. You got a very nice, strong bullish trend. Let's see how this fared. See, what I'm going to do immediately when I see this trend from the bottom is I'm going to look at the 50%. So 13,200 on GRX Euro is what I would look at as a support. Let's see what it did coming down to here. So interestingly enough, for this whole year down move, here was your actual resistance. Oops. And it actually broke above it. So I would say that the German stock market is more bullish than the U.S. stock market because the S&P 500, it came up to its 50%, held it. The NASDAQ didn't even get close to its 50%. You can also see in the NASDAQ, it did that little wick on Tuesday. So these little false moves, see how powerful they are for signaling reversals? And you had it back here in October. Let's see, GRX Euro. Take a look there. Back in October, not quite the same, but maybe the hours were a little bit different. But, well, if we dug into it, we could probably find it. But watch for these things. Watch for these things. They're so valuable, so valuable. So this was any other questions? We're starting to get towards the end. I like to kind of wrap things up after about an hour. But if you guys keep me talking about stuff, I will. There's a couple of things that I wanted to look at that I found pretty interesting from this week. So I'm going to jump into that real quick. Let's see here. Oh, I had some people want to look at some things. Let me not forget. Okay, Gord Dunbar wanted to look at Truist, TFC. I definitely like TFC. I have owned TFC for many years. It's, well, like many things, it's not a great dividend play, but like financial stocks, it is a good, solid local bank fundamentally. Now, chart-wise, it came down to its 50% in the summer of this year. It broke below it, held to the upside, and this is going down. I hate to say that because I do own this stock, but it's in retirement portfolio, so I don't really touch it. But it does still continue to earn a dividend, and I've just been letting it grow for years. So that's my disclaimer. Let's see what the dividend is once that it goes, even as it goes down. See, the thing about this is 52, 48, 48. They have never decreased their dividend, which makes it, so going back to COVID, before COVID, the dividend was 45, 45, 45 a share, 45, 45. The one thing that really stands out to me as far as this being a strong company is the fact that in all these years, they've never decreased their dividend. Now, at this point, that's interesting. Right now, Truist Financial has a 5% dividend yield with this move down. Here's why that's kind of interesting. If you think about it, what is the risk-free rate now? Well, with interest rates going up, that means that bond interest rates are going to have to go up to match. And so as the bond interest rates go up, then if you can get a guaranteed 30-year bond at, 4%, are you going to buy something that has, with risk, the risk of a stock, for anything less than that? So it's almost, to me, the price of banks going down is because of their dividend yield. Now, that's my very unfundamental. I'm a chartist. I don't really focus on fundamentals. But I do find that pretty interesting that as TFC goes down from a charting perspective, if I was trading this from a chart perspective, I would not want to be long this because it's broken its 50% and it's entered into what I call the valley of risk, where you don't know where it's going to stop. But from a dividend perspective, I mean, how much would you like to have a 5% dividend last year when the best you could get was maybe like 2 from blue chip companies? That's interesting. I had not kept up with that. But like I said, through all its history, the one thing I knew to look at, and like I said before I even started looking at this, is I've had this stock for many, many years, more than 10. And every year they increase their dividend regardless of what the share price is doing. That's a sign of a strong company, and that's also the sign of just a good place to have your money. So regardless of what this does, compound interest should be okay. So that's interesting. Thank you, Gord, for pointing that out to me. I'm going to have to look and make sure that I have these on alerts, because if I were to get a bullish signal in whatever future market that we have in the next couple of weeks and months, that could be good to pick up some for the long term, actually. That's going to be my strategy going into next year, is assuming that we are going to at some point get a turn in the market. We've had a whole bearish year. The most you could probably expect is a 3-year bear market, because that's what 2008 was. Depends on who you ask. There's some people that think the world's going to end and they're out, growing rabbits and, eggs in the rural area because they think the dollar's going to fail. I'm not really ascribing that belief. I think we enjoy capitalism. We like ordering stuff from Amazon. That will probably continue. Where is Amazon at? Amazon is, like I said, Amazon did that, which I said, which is the valley of risk. This was a big L for me this year. Back in March, when we pegged this level right here, which was a 50% of the COVID low to, at that point, the all-time high. This March level here on Amazon was a key level that I posted about. It was made a whole video for another channel about, and came up and blew, and I closed it. I'm glad I did too, because now here's where we are. But that doesn't mean that people are going to stop using Amazon. Look, stocks are cheaper now than they were a year ago. That's what I tell people when they ask me, like, what do you think about the market? Should I buy stocks? They are objectively cheaper. So if people were rushing to buy stock in companies that they like back in 2021, when they couldn't figure out what to buy because everything was going up, just remove the current FUD, remove the current emotion, and just think about it in those terms. What are companies that you like? What are companies that are going to be around in 10 years? They are on sale. They are absolutely on sale. And I know that's contrary to what I said about the S&P 500 over the next couple of weeks based on the technical analysis. That's because I'm looking at that from a trading perspective, because I'm a day trader of futures. Broadly speaking, stocks are on sale. So keep that in mind. Keep that in mind. All right. Let's look at some other things here. Got a few more things to look at in the chat. See, if you guys keep me looking at stuff, I'll hang out with you some more. I thought this was kind of interesting. Let's jump back into trading for a second. So this was a little bit of So I noticed this when we were on Tuesday, because I woke up early to trade this. So normally, when you have a news event, well, not normally, occasionally and usefully, what you'll see the minute before or the minute right after the news event actually comes out, the data is actually released, you'll see a swing in one direction, and then it'll come back, either down or up. And very often times, you want to go the opposite side of that swing. It goes back to the whole spike trading philosophy that I use and everything else. Let's look at Tuesday of this week. So Tuesday. All right. Let's play this out. So slow down a little bit. All right. So this is 8 a.m. We're coming into 8. The news is going to be at 8:30. Okay. The news is going to be at 8:30. All right. Let's play this out. So there's the 8:30. Hold on. Let me mark this. I want to kind of play this out at a speed that you all can kind of see what I was seeing. I started really looking right around 8 a.m. And we know that news event is going to happen at 8:30. What I'm looking for in a news event like this is I'm looking for price to swing in one direction or the other 1 minute before or 1 minute right at 8:30. So either 8:29 or 8:30 Eastern Time. I'm looking for price to give me some kind of violent reaction that's going to be useful. So let's see what happens as we go through here. So we're sitting here watching this 1 minute. We're watching this play out. I'm sitting here talking to my peeps on Discord. By the way, click the link below and join. It's free. I just want to talk to people and trade live. And then boom, what is this? What is this? What is this? What was this at 8:26? Whoa. Now, I didn't trade that because it was weird. Now, normally when it spikes to the upside like that, I'm going to think short. That's what I originally thought, but I also looked at the time, and it's 4 minutes before these kind of things should happen. That's weird. That's weird, man. No, I'm gonna sit back on this one. I'm gonna sit back, and then the news comes out, and boom, somebody knew. Some group of people knew. As a trader, I'll tell you this from watching these every news event this year and many, many in years past. This that happened Tuesday does not happen. That is not something that happens on accident. Somebody knew. Somebody knew. And that led to speculation. I don't know if it came from the White House. But of course, the press secretary said no. There was no chance that anyone at the White House leaked the November inflation report before 8:30 a.m. Now, I'm open to there being some other explanations. Maybe someone fat-fingered an order too early. But that's a big move in the S&P 500 E-minis or the market as a whole. Nobody goes in and bumps the market up that much unless they're pretty damn sure that they're going to get what they want afterwards. So that was interesting this week, actually, too. A little bit of conspiratorial stuff to mull over. All right, let's look at some other stuff. Okay, yeah, so this is what I wanted. Thank you, Jen. So this week, in other news, the Department of Justice and the SEC charged social media influencers in an alleged $100 million stock pump and dump scheme. Oh, crap. Hit the X. Meant to hit something else. So I hadn't actually heard these names right here. I don't follow these channels, but I look at some of the names like Dip Deity, Ultra Calls, Hugh Bear, and some of the names of these Discords. These are all on like Discord, Twitter, that sort of thing. That is absolutely what I am glad that I have stayed away from. It's not that I'm very libertarian about things. I'm very non-judgmental about how people try to play the market. And so I'm very incredibly neutral to the morality around it. I'm just not going to do it myself. And it's not because, well, it is because I don't want to face charges, but it's more because I like charting. I like the challenge. And this kind of way of trading where you get a bunch of people in to pump something up and then you dump it, this is social manipulation. It's skeevy. I don't like it. It would make me feel dirty. So I guess I do have a moral aversion to it. It just makes me feel bad. But some people don't mind. And I think as I was going through some of these select text right here, apparently disclaimer, my tweets are not recommendations to enter a stock. Do not trade based on social media. Well, that's not what it is. I think what was that quote I was reading where there was like a chat? It's not in this article, but there was a chat where someone was basically making fun of people that jump in after them. I mean, it was pretty obvious. Like, this is a glaring example, allegedly, of people that were building up these big communities, of people that would help pump the price up the order book, and then they would profit from it. I've gotten spam on Telegram trying to get me to join these kind of groups, and it always makes me feel weird. It's kind of like, I know that these work. I know that a lot of people struggle with trading, struggle making money, and so to join a group where they're guaranteed profit, it must be very, very appealing, but it's not to me. And like I said, you're going to see a lot more of these indictments come out because people are very angry. Like the SBF hate that has been prevalent over the last few weeks has been very interesting to me because I never did anything with FTX. I don't really have any friends that got affected by FTX. And when I ask people that are really mad at SBF, like, did you have money in FTX? They're like, no. The reason is because really, before FTX imploded, their Bitcoin bags were worth $20K, and there was a little bit of hope. And then after FTX imploded, well, now their Bitcoin bags are worth about 20% less. And I think it's not, it is that where they are very offended by the fraud that he allegedly, probably, committed. But they're more pissed off that their bags have gone down. And it's a lot easier to look at that guy with his big bushy hair and say, he's the reason I lost money, rather than my decisions. So I think that's a little bit operative there. So what you're going to see is you're going to see a lot of this justice, calls for justice for people that hurt them in cryptocurrency, when really we were all playing a game. And the game of risk, you get paid to take risk. That yield that you were earning in DeFi, all that gains that you were earning in 2021, that came at the cost of risk. And now, this year, you begin to see what that cost. That's what this is. This is the flip side of the coin of risk. It just is. All right. Federal judge dismisses crypto scam lawsuits against Kim Kardashian and Floyd Mayweather. Well, that's good. I'd hate for anything bad to happen to those guys. They got some hard lives. All right, IBM. Oh, XLU. You wanted me to look at XLU. So this is utilities. So hold on. Let's take a look real quick. What is the? I like it how it's surpassed the 50% of the move down here. But utilities are going to be typically a dividend play. So the XLU is 46.469. The last one was 515. I bet that the dividends are going to be increasing. Well, no, it actually went down in 2022. Let's take a look at the dividend yield of XLU. I'm glad that you brought up TFC for me, so I could see that they're at 5%. That's really good. You know, the market paradigm, in case you haven't noticed, has changed. And now when stocks are cheaper is the time of your investing career to start looking at the long term. And dividend yielding stocks are definitely one thing that you need to be looking at. So XLU is 2.28. Oh, excuse me, that's 2.84. The reason that utilities have been going up is because of, the market has been going up, but also in terms of sector rotation, utilities tend to be a defensive stock because people are still going to need to get their power on, their gas. So in bear markets, utilities tend to outperform the regular market. Where is my sector analysis chart? So if we just look at let's look at the last 60 days, 60 trading days, by the way, utilities are actually down. That doesn't sound right. I guess it is true. I guess it is compared to the rest of the market. So they're actually not outperforming yet. Energy's been doing very well. I need to do it. I'll probably wait till next week to do a deep dive into this. It is worth revisiting as well. But typically, as the market is in its downswing, utilities will actually start to outperform. So let's see here. So according to this, in the last 60 trading days, which goes back to September, let's look at October though. 250. I want to get it from that CPI print. So in this rally from the CPI print, what has led? Discretionary has definitely lost. Communication services have lost. And tech, industrials, and materials, which indicates we're in a bull market up. So, need to do a deeper dive into that, see what that means. All right. Let's look here. Okay. XAU USD, I believe that's gold, right? XAU USD, yeah, that's gold. I look at the gold futures. Gold has been very interesting. Gold is moving along with everything else, but it has definitely had a recent rally. It needs to get over 1,850. It's interesting how the level on Bitcoin was 18,500 and the level on gold is 1850. What does that mean? I don't think it means anything, but I just find it interesting. So that's the level to surpass. But again, this kind of goes back to the philosophy of just simple chart analysis on the long term. You got a double top, and you have for the better part of the year, going back to March, on gold. So you basically broke below the neckline. I started getting short silver when it broke below its neckline, but I had to close that out because it's starting to recover a little bit. So while we had a sign of bearishness, it so far looks like it's kind of trying to hold right here. So I can't really say one way or another, but what you want to look for is you do want to look for price to get back up to the resistance here at 1850 on gold. Let's see if that's relative to your chart. XAU USD. I think that's what you trade if you're doing some Forex. Yeah, same number, 1840. So I wouldn't be wanting to jump in long right now because that's about all you can expect, and you still probably need a downside movement. But if you're already long, then this is where you want to start getting a little defensive. And then if you can get a break above it, maybe pull back, that would be how I would look to take that long. But this trend's pretty mature. I think we should also take a look at the DXY before we sign off here. It still wants to try to get down to 102. The actual way of expressing it I prefer is the dollar yen. And I'm looking for this trend to kind of slowly creep its way back down to 127. What's up with Tesla? TSLA. So I had a conversation on Discord this week about Tesla. I've already got it marked up. Tesla's not good. And you can see I already have it marked up, but let's start over. So like all things, I look for 50% retracement levels. And with Tesla going back to May of 2019, the start of this big old bullish trend, up to the all-time high in November of 2021, our 50% retracement level was hit. I think this was 860 pre-split. I remember that number, 860. I think it was a 4 split. So yeah, 213 post-split. But when this hit, it was 860, I believe. But that's basically the same 50% retracement of this whole move up. So that was the level it needed to hold, okay? And it did. It did briefly. It did briefly for a couple of weeks and months. Even gave you a little second kiss right there on that level. And so what you're looking for is a pullback to here, and you want it to get up to there. The problem is you didn't. The problem is you had this retest, and it didn't actually get up to retest that high. That's a problem. That's a very big problem. Because if something is bullish, because if you buy something, you want it to go up. If it doesn't go up, you have a problem. Not just emotionally, but just think about it in those terms. People should be wanting to buy this at higher prices if it's going to go up. If you have a very clear all-time high that it comes down and makes a solid hold, people start buying it here, but nobody keeps buying it, that's a problem. And so now you come into this little area right here, and I have a name for this, which I use all the time. It's called the Valley of Risk. It's a big valley of despair because people tip to be bag holders. People end up bag holding something once it breaks below this clear support, fails to get above it, and they don't know what to do. A lot of people will bag hold something, and whenever they sell out of it because it becomes too painful, it will shoot back up. Or if you hold on to it, it's just going to grind you. And unfortunately, that is what Tesla is in right now. Tesla has broken below that support after failing to get to the all-time high, and it's now inside the Valley of Risk. So I can't tell you where this is going to stop. We've had several examples of this in tech recently, or in lots of things. I mean, I even talked about it with TFC, where as an owner of this and a dividend play, it likewise has entered into its Valley of Risk. It's broken below it, came back up, held it as resistance, and now it's gone back down. My Zillow which I very much liked. It did the same thing here in May of 2021. I've talked about this at length, where it came down to this level. It's a lot clearer on the daily. Came down to the 50% level of the COVID high to its all-time high. I bought it at this level, and then when it failed to, it tried. I got out once it broke below it, and I'm glad I did, because at this point you're still bag holding this stock. You don't want to be bag holding this stock. You really don't. And I know it's painful because you probably like the company just like I like the company, but this year has really taught me to quit liking companies. You need to have a reason other than you just like Elon. And I'm not saying that's your reason, but so much money has been lost, so much potential capital has been lost by bag holding over the last 2 years that I don't think it makes up for diamond hands by any means. That was a stupid meme. When something fails to hold a key level, it's okay to get out of it. Now, I know that legacy financial advisors want you to just hold. But unless you're earning some money from it, unless you're getting a dividend or you have another support level that you're looking at it reaching, you need to go ahead and consider the possibility that this thing's just going to grind even lower. Now, is Tesla going to go out of business? No. But think about how many people said earlier this year when Facebook dropped, Facebook, I got to bring this up. How many people, when Facebook dropped to 220, it can't possibly go lower? The reason I stayed away from that, and the reason I remember this very succinctly, and actually, you know what? I need to start actually taking notes for my end of year letter. One moment. Because this is going to be something I'm going to talk about. Yes, I still use paper. Because I'm a boomer. It opened below the 50% retracement level when it had this earnings. Oh, you got to see it on the daily. So the 50% from the COVID low to the all-time high, it didn't even flirt with it. It opened below it. And then all across social media, people said they were buying this because it can't possibly go lower. It's Facebook after all. Well, that is not really a very sound investment thesis. It can't go lower. And so people that bought it at 220 are now sitting bag holding at, what are we finally? What is Facebook at? 130, 120, 80. Whoa, I didn't realize it went below 100. So yeah, how much lower can the stock go? A lot. Here's a good rule for you. If you ever find yourself asking the question, how much lower can it go? 50% lower. That's just like what I said, or I showed in Bitcoin in 2018, where it was sitting at 6,000 and everyone thought this can't go lower than 6,000. It went down to 3,000. Facebook, it opened after that earnings at 237. People ask, how much lower can it go? Well, your answer is 120. So 50%. So anytime you find yourself asking that question, your immediate answer needs to be, it can cut in half. It can lose another half of its value. That's a really good tactic, I think, for making sound risk management decisions. It really is. So, all right. Kroger. Oh, well, we know we love Kroger. What a wonky chart. But I'm not going to stop shopping at Kroger. What is the Kroger's dividend yield? Probably not good. Probably nothing's that good yet. But you know what? As interest rates go up, people are going to start demanding higher dividends. Last year or over the last time I really looked at dividend yields in earnest, they were all below 2%. Now, with prices going down, because it's going to be dividends per share, as long as the dividends don't go down, 239%. So it's interesting as interest rates go up, the risk-free rate goes up, stocks go down, and dividend yields start to go up. So it's interesting how that works out that way. You're welcome, Scurry. Hope that helps you make an informed decision. All right. I think that's going to cut it for this week. I want you all to, let me see, what is next Friday? Next Friday is the 23rd. That's going to be a game day decision if I don't have anything going on for Christmas. I would like to join you guys. We will see. So if I don't, I hope you have a Merry Christmas. I will definitely do a live stream again on, let me check the market holidays. Hold on. So U.S. market holidays. Holidays, trading hours. So 2022, it's only closed on Monday, December 26th. So the 30th and the 23rd, yeah, I'll try to join you guys then. So until then, click the link on Discord below. If you can't get on that, send me a message on TradingView. Make sure that you come hang out with us because I like to hear your ideas and teach. So thanks for spending your Friday evening with me, and have a good weekend, and happy holidays.